In a market dominated by the artificial intelligence boom, where the magnificent 7 big techs are the undisputed protagonists of the market, there are solid and often semi-unknown companies, leaders in their markets, capable of guaranteeing excellent profits in the near future. As has already happened in the past, the euphoria of artificial intelligence could turn into a dangerous speculative bubble and risk deflating, trapping a huge number of investors dazzled by the presumed easy profits of everything that contains a trace of artificial intelligence. In this context, we have decided to reveal 5 companies that operate in little-known and little-publicized sectors, but which are solid realities, in constant growth for years, and which could represent both an excellent diversification for the portfolio and a great earning opportunity, even greater than many stocks currently in super trend, which have already appreciated significantly. So we'll reveal 5 solid stocks to invest in 2024 that you should keep an eye on if you want to get some great deals. But before I start describing these 5 actions to you, remember to subscribe to the channel and activate the bell so you don't miss the new videos. Thank you. Let's start immediately with the first title of the 5 solid stock to invest. Number 1, Simpson Manufacturing Co. Inc., SSD. Simpson Manufacturing is a leading manufacturer of wood building products, 85% of sales, and concrete building products, 15% of sales. The company basically sells products to strengthen and support construction, to improve the safety and durability of structures. Products are sold to diverse markets such as residential, light industrial, commercial construction, and infrastructure construction. The company also sells products to the remodeling and do-it-yourself markets. What is interesting about Simpson is the brand and its sales network, which is 90% active in North America. Its products are used by 98 of the top 100 builders, with more than 14,000 wood products and 3,000 concrete products sold. The company's growth has been driven by a thriving U.S. real estate market, successful execution with continued new product development, and expansion into software solutions. Simpson has a very healthy balance sheet, about $600 million in cash, $600 million in debt, and a current ratio of 3.5, which indicates no problem overcoming short-term negative events. In 2022, the company took on debt, around $700 million, to pay for an acquisition which it has already started paying off smoothly, thanks to its cash flow of more than $200 million, providing the company with ample liquidity. Simpson currently has a Stock Unlock Insights rating of 3.86 and an analyst rating of 413 as proof of its quality. Today, the stock is trading at $186.44, and since the beginning of the year, its value has almost doubled. In the last month alone, it has appreciated by 22%. The stock is at its all-time highs, but has all it takes to continue growing. In our opinion, it could be a good strategy to wait for some retracements to get a good price before investing in it. Number 2, Lennox International Inc., LI. Lennox International is a leading global provider of heating, ventilation, air conditioning, and refrigeration of ACUR products and air conditioning solutions. Lennox operates in 3 key sectors: residential heating and cooling, 68% of revenue, commercial heating and cooling, 19%, and refrigeration, 13%. The residential segment includes products such as furnaces, air conditioners, heat pumps, and indoor air quality equipment for both the replacement and new construction markets. The commercial segment offers rooftop units, split-system air handling combinations, and small units for commercial buildings. The refrigeration segment offers condensing units, air-cooled condensers, and refrigeration rack systems. The goal is to preserve food and perishable products in various environments, from grocery stores to restaurants. They also serve data center and machine tool applications. Its market is 95% represented by the United States. Lennox is a company with slow but very steady growth. Over the last 20 years, revenue has only increased by 3% per year. But the impressive feat is the consistent improvement in operating margins from 5% 2003 to 15% 2023, while maintaining gross margins around 28%. Basically, the company hasn't grown much but has improved operations by reducing costs in the manufacturing and distribution processes. Lennox's growth over the past decade has been driven primarily by a focus on efficiency, including cost-cutting initiatives, expansion into low-cost sources, South Asia, Mexico, and Turkey, digital investments in automation, robotics, and e-commerce. A distinctive feature of Lennox is its vertical integration and direct sales approach, which differentiates it from its competitors, selling directly to over 7,000 authorized resellers and installers. Lennox currently has a Stock Unlock Insights rating of 3.84 and an analyst rating of 3.45, which confirms its quality. Today, the stock is trading at $424.66, and since the beginning of the year, its value has grown by 80%. In the last month, it has appreciated by 4%. The stock is at its all-time highs but can continue its unstoppable growth. In our opinion, it is a stock to keep under observation and buy at the first market retracement. Number 3. Pool Corporation. Pool Corporation is the largest wholesale distributor of swimming pool and related lawn products in the world. The company is a typical example of a simple but highly predictable business model that has demonstrated remarkable growth over the past decades. Pool Corporation has achieved an impressive track record over the last 20 years. The stock's compound annual growth rate, KGR, has been 19%, translating this growth into a staggering 32x increase in value for investors, including dividends. The company also plays a significant role as a regional wholesale distributor of irrigation and landscaping products. Its extensive network includes 430 distribution centers across North America, Europe, and Australia, serving more than 125,000 wholesale customers. These customers consist primarily of local contractors responsible for building and maintaining swimming pools, as well as retailers who sell swimming pool supplies to consumers. Approximately 80% of the company's operations generate recurring revenue, of which 61% is non-discretionary maintenance products. This high percentage of recurring revenue improves the predictability of Pool's business. Pool enjoys a unique competitive advantage as a mini-monopoly in its industry. It is around 15 times larger than its nearest rival and benefits from its national footprint, broad product range, strong supplier relationships, and large market share. This dominant position allows the company to maintain a strong position on its market and consolidate its position as a reference distributor in the swimming pool and outdoor space sector. Pool's financial performance is solid. Over the past 10 years, the company has grown revenue per share by 13% and earnings per share at a compound annual growth rate of 23%. The company management has a proven track record of delivering consistent and exceptional performance. Pool Corporation's impressive historical performance, dominant market position, strong competitive advantages, and favorable growth prospects make it an attractive investment opportunity. Pool currently has a very good stock unlock insights rating of 3.82 and analyst rating of 3.89. Today, the stock is trading at 361.02, and since the beginning of the year, its value has grown by 20%. In the last month, it has appreciated by 6%. Compared to its historic highs at the end of 2021, the stock has depreciated by 40%, and for this reason today it could already represent an excellent long-term investment. According to our analyses, the stock could have all it takes to rise by at least another 20% in the short term. Before continuing with the fourth company, we want to ask you a question. What do you think of this market phase? Do you think we have entered a new bull run, or will there be a new crash soon? Let us know what you think. It's very important to us. Thank you. Number 4. Hershey Co. HSY. Hershey is the market leader in the broader U.S. confectionery industry with a 33.5% market share, a few percentage points ahead of Mars, M&M's, Snickers, and Wrigley's gum. The confectionery also includes sweets, mint, and chewing gum in addition to chocolate. Today, Hershey is a company with a portfolio of household names such as Hershey's Kisses, Reese's, Kit Kat, Jolly Rancher, Skinny Pop, and Dot's Homestyle Pretzels. Hershey announced that its brands continue to gain share in the U.S. chocolate market, where it already holds a dominant share of about 45% of the overall market. Hershey's greatest competitive advantage is the pricing power that comes from owning some of the most popular chocolate brands in the world. The durability of Hershey's brands is matched by few others. The fastest growing part of the company is the snacks segment, where Hershey has significantly stepped up investment over the past 6-7 years. The increased attention to snacks is already paying off. In 2019, this segment made $410 million in revenue. This was equivalent to about 5% of overall revenue at the time. As of the end of fiscal 2022, the same segment brought in more than $1 billion in revenue, representing a significant 10% of Hershey's total revenue. While this segment is still in its early innings, management has hit the ball out of the park with these acquisitions in recent years. Hershey is trading near 52-week lows today, down about 31% from its all-time highs in May of this year. This decline is probably due to an overestimation that the market has made towards this type of stock to protect itself from the increase in inflation. Furthermore, the continuous growth of slimming drugs that reduce appetite and the consumption of these products may also have influenced part of this correction. Often the market does not act with logic, but under the impulse of ideas that are often unrealistic and yet to be verified. Regardless of what investors might think about new competition and lower demand from weight loss drugs, Hershey has survived and thrived for more than 120 years since those early days in Pennsylvania. Not only that, the company has managed to remain relevant among consumers in a highly competitive space through innovation and numerous successful acquisitions. This makes it reasonable to believe that Hershey will be able to overcome the challenges the company will face in 2023 as well. Hershey currently has a Stock Unlock Insights rating of 3.56 and an analyst rating of 3.52, which confirms its strength. Today, the stock is trading at 190.02, and since the beginning of the year, its value has fallen by more than 15%. In the last month, it has depreciated by 4%. According to our analyses, the stock is facing a large price correction, which has made it very interesting with a target price above $260, i.e., with a profit margin of over 40% compared to the current value. At this point, if you liked the video, we ask you to subscribe to the channel, put a like, and activate the bell to stay updated on new videos like this. Thank you for your support. Finally, last but not least, here is our pearl for today. A truly interesting title, one of a kind. Number 5, RCI Hospitality Holding Inc. Rick. RCI Hospitality is an entertainment and bar business and is the only publicly traded U.S. operator and buyer of nightclubs. The company is engaged in various businesses in the hospitality and related businesses. All management services and operations of the company are conducted by its subsidiaries, including RCI Management Services Inc. The company operates a total of 70 venues, offering live entertainment for adults, including 2 that are under renovation, and restaurants and bars, including a food hall. RCI also operates a corporate communications company that serves the multi-billion-dollar adult nightclub industry. The company has 3 segments: nightclubs, bombshells, and other. Its nightclub portfolio includes a variety of brands and formats that appeal to different customer demographics. Its nightclubs are located throughout the country. Bombshells Restaurant and Bar is a chain of military-themed casual restaurants with a focus on sports and entertainment. RCI is a solid company with excellent fundamentals. This year it reached its all-time high but is now going through a correction phase where the shares have fallen by 35%. COVID has been a difficult time for RCI. However, as the United States reopened, a honeymoon period also ended. It led to record operating results in 2022, resulting in record margins that exceeded the wildest expectations and are unlikely to be repeated in the future. With the post-COVID reopening, the company managed to open its Bombshells premises after winning a case with the government. And this allowed it to have an almost monopolistic market until the other premises were also allowed to reopen completely. This is why the 2022 fiscal year was turbulent. Now things have returned to normal, and therefore RCI's growth has also returned to its normal pre-COVID growth, which still remains excellent. Additionally, 2023 was a year of investment for RCI, with many capital expenditures flowing into the renovation of acquired clubs and their casinos. The company has proven that it can represent this fragmented industry as the largest player with a good reputation in the industry and bank financing. RCI currently has a Stock Unlock Insights score of 3.61 and an analyst rating of 414, which confirms its great potential. Today, the stock is trading at 67.83, and since the beginning of the year, its value has fallen by over 30%. However, in the last month, it has grown by 16%, showing signs of recovery. According to our analyses, the stock today represents an excellent investment opportunity with a target price, even higher than the highs reached this year, of $130, i.e. with a profit margin of almost 100% compared to today. These were the 5 solid stocks to invest. As you have seen, they are all healthy and solid companies that operate in niche sectors in which they are true leaders and can represent an excellent investment in the medium and long term. Betting on financially solid stocks with a consolidated market is a type of stock investment that reduces risks enormously and almost always guarantees excellent double-digit earnings. Someone said sell when everyone is buying and buy when everyone is fleeing. The stock market often drags you along with its fascinating trend, but you risk entering the market when the game is over. Finally, we remind you that we are not financial advisors and that these are not invitations to purchase, but are simply our personal analyses, the result of our experience on the U.S. stock market. We always invite you to delve deeper and verify our analyses before investing your money, because you must be aware of your investments and not risk losing them just because of rumors you hear online. See you soon, investor!